Ah, okay, I think everyone is set. I'm really sorry for my late starting. It's because I had a very, big problem. What can I say? It was raining over here, so I wasn't able to start my streaming. I'm just facing the load shedding problem. And if you can hear me, just let me know because I need to be sure that you can hear me as I have some problem. Uh, I mean, audio problem. And I'll just remove something quickly. I just came home. I mean, it would be like 2 minutes maybe. So there will be the news within 1 minute, and let's see. So far, I remember that our target it will go lower, and it's just below the opening gap. So just let me know that you can hear me. Okay, just write it down that you can hear me clearly. That will be better for me. Uh, So I mean 16 more before the NFP. I'm expecting lower prices. Okay, if you see, it has actually taken this high. Okay, so there is the news. I'm expecting it will go lower, and today we will actually clear the sell side liquidity from this sell side liquidity. I mean, if you mark this, this is our sell side liquidity. So I'm expecting it will clear the this sell side today using NFP news. And be careful, guys. This news is very, very dangerous. So you can't just take entry or something. If you do that, you will be regret. Can you hear me? Can you please write it down that you can hear me? Otherwise, just I'm speaking, or I'll write it down if you can hear me. I mean, there is audio, something. I'd like to see that it will clean this sell side liquidity today and expand lower. Okay, that is my expectation. This whole run was the fake run. I mean, before news, they actually create this high, and then using this fair value gap, they send price higher, take the buy side liquidity, then this is the run. So I'm expecting that it will give me, I think it can just make the 22 YT model from here. If you mark this one as your market structure shift, this is your market structure shift. So maybe it will make some kind of fair value gap over there. Then we will go for the sell side. I'm not sure that you can hear me or not, guys. Uh, Skill to earn, brother. Can you tell me that you can hear me or not? I mean, can you please write it down so that I'll be sure that you can hear me? Yes, we can hear you. Yeah, thank you, Michimani. Because I'm confused about. I'm just struggling with my voice. I don't know how to fix this. It's breaking every day. I have heard that. I mean, when my live streaming has finished, I also heard it's broken. So I'm just struggling with this. I don't know how to fix this. I'm very new to this platform. I mean, the streaming platform. So it's very difficult for me to do that. So far, we are seeing that it has cleaned the buy side liquidity and gave me the very nice market structure shift. Guys, look at this, okay? It's very important. Before this big run, I mean the before this news, market actually went lower. It has traded this I fair value gap, then send this price higher. Okay, when it started to go high, most of the people will think that okay, maybe it's going higher, so they will take buy, 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 buy. What price did actually? It went above this high. It has cleared all of the buy side liquidity from here, and this is the run from NFP. This clean lows, it was clean for like near about 3 days. Market didn't take that. This, when I have seen this, I told you, I mean from yesterday and the day before yesterday, I told you that if price stay over here, then this sell side liquidity will be the target for the NFP. And today I'm pretty much sure it will clean this sell side liquidity and then trade to the consequent encroachment, at least to the consequent encroachment. And if it has energy, then it will go lower. We will see it. Okay, how did it trade? We will see it. Just let me go a little lower. So here is 1 minute chart. Don't push any kind of button, okay? Because all we are doing here, we are just reading the price. When you will see this kind of big news event, this is highly manipulation, and this market is manipulated manually. I mean, all the time market actually run by the algorithm. When it went, I mean, it goes with algorithm. There is some rules, but in the meantime, when the news release, this manipulation actually has done by manually. So you don't have any right to press any kind of button in this type of news. Maybe today's morning we'll see sloppiness because this is a very big run. Whenever you will see this kind of big run, you have to think the next price action will be sloppy. What does it mean? You will see it will actually it will make high, it will clear the high, it will make low, it will clear the low. So there is no rules. You can't just trade this one. That's why you have to be careful. I think it's better to leave the morning session and wait for the PM session. If you can wait for the PM session, I think you will get very clear, I mean, clear price action. Okay, XG, good profit, news time. Uh, if you trade news time, this is for you, XG. I mean, XG. If you actually trade this type of news, you see this big run. There is a lot of gap. I mean, if you just think like that way, okay, you take a buy, something like that, and your stop loss was over here. Okay, when I mean news released, you will see you have 49. I mean 49 handle stop loss, but when you will be lost, you will see that you have already taken near about this type of loss. Why? Because sometimes they actually make gap over here. If you go to the second chart, you will see there is a very big gap, and whenever news released, you will find this kind of gap, and gap doesn't actually close your trade. Okay, so you will take a big loss. If you are lucky, maybe you took this one as your short, kind of this, and you can't even trade this one. If you have a, I mean, entry from here, then you can maybe take this trade. But if you'd like to take your entry from here, you can't do it. So if you do this, maybe luckily you have actually got this run, but if you are wrong, you will see your balance has gone. So don't take any kind of risk in the news time, at least not in FOMC, NFP, PMI, CPI. This type of news you can't trade. This is the rules. Don't break the rules. Okay, so actually there is nothing right now. I will just go to the dollar index. I'd like to see what it has done over here. Okay, so where price went, there is another gap. I actually forget to mark it because I was outside. This is the lowest gap. So market actually went lower to this gap, and by using the news it has started to go up. My expectation is it will go higher today. I mean the dollar index, it will go higher. At least it will break this gap. I mean this high, it will break that. That is my expectation today by using the uh, NFP news. I mean this consequent encroachment, it will go above this consequent encroachment. So if it has energy, then it will clear the buy side liquidity as well. But so far we can see it has actually traded this hourly fair value gap. Let me go to the hourly chart again. It has traded this hourly fair value gap and then started to go higher. That is the thing, okay? So here is your hourly chart. It has cleared the sell side liquidity and went lower to this fair value gap. It started to go higher. You see this is the clean high, okay? Let me just mark it. One of my brother yesterday asked me how to he doesn't know how to mark the DOL, I mean drawn liquidity. If you ever seen this kind of equal highs or equal lows, you will mark that as your, I mean, drawn liquidity. If you mark this is your drawn liquidity. If you see this is also your drawn liquidity. This high, they are very clean, okay? So market will go over there. And if you see this hourly fair value gap, I would like to see it will go through, I mean, if it can break this high, it will go through this hourly fair value gap. I will see on candle it will go like this, okay? So no Mickey Mouse move over this hourly fair value gap. I don't want to price respect this hourly fair value gap. It will just go through this and it will clean this buy side liquidity, I mean the clean buy side, okay? Just let me mark it as buy side liquidity. I want to see that for dollar index. It has done its job lower part over here. I mean it has actually filled this inefficiency place. So I'll go to the Nasdaq again because I would like to talk about the opening gap. One of my brother, he asked me how to determine, I mean, how we know about the opening gap. How do we trade opening gap? So here I'm using this, you see regular trading hour, and if you can see over here, it's regular trading hour and the electronic trading hour. So what is regular trading hour? So there are some guys who are actually in USA, Wall Street. I think you all know about that. In Wall Street, there are some people who actually trade live. Okay, they start their trading at 9:30 a.m. and they finish their trading at 5 p.m. They don't care about the I mean electronic price. They don't care. They only trade this. Let me go to the 15 minute. So you see whenever you will go to the regular trading hour, you will see this kind of opening gap. This is the candle when yesterday's PM session has closed, I mean at 5 p.m. This is the closing, okay? And the starting of 9:30, that is our starting. Now you have got this opening gap. How do you use this gap? Let me go to the 5 minute chart first. Okay, when you will see this kind of opening gap, you will you will think, okay, you don't need to be sure, you will think from 9:30 to 10 it will come back to this gap. It will come back. It can come back or maybe it won't come back, I don't care. But you will think that it will come back to this opening gap. It will trade toward this opening gap. When it will come to this opening gap, you understand, right? What is the opening gap? This is the closing of yesterday's 5 p.m. This is the opening of 9:30. This is the gap, which is the opening gap. I mean the opening range gap, okay? So when price went above, it will come back to this gap, and it will happen within half an hour, I mean from 9:30 to 10. In this time it will come back to this opening gap. It is very important. So I think uh, If you just try to understand this concept, it will be very helpful for you to fix your target. So when it will come back to this opening gap, I love to mark the consequent encroachment of the opening gap. Any kind of gap, I really love to mark the opening, I mean the consequent encroachment. The higher portion of the the opening gap and the lower portion of the opening gap. If you see, market actually try to stay above this higher portion of this opening gap, you can think market will actually would like to go higher, and if it goes through this opening gap, it will go lower. So why do you need this opening gap? You see, market went here, come back to this opening gap, went above again. Why price stopped there? It could be stopped here, it could be stopped maybe here, but it stopped there. Why? The reason is there is the buy side liquidity. This is your buy side liquidity. So market went above there to take the buy side liquidity. When it has taken the buy side liquidity, it give you a, reversal, or you can say retracement. That's why this level is very important. You have to mark some kind of level where price could go and it will take a reversal from there, or it will just stop over there, and that would be your target. Okay, like here, it is the place where you will assume market will go over there, and maybe it will go through this gap, or it will give you a retracement. This is the place. You see, this place is empty. You don't have any kind of idea what price will do when it will come here. I mean, all of this place, you don't have any idea. But when you have seen this kind of gap, opening gap, new day opening gap, new week opening gap, then this kind of gap, okay, when you will see this kind of gap, you will assume that market will give you any kind of reaction to that gap. It is important. That's why you have to mark this opening gap every day. When market start from 9:30, you just have to mark the opening gap. And I prefer to mark the consequent encroachment as well. So it's up to you. If you would like to mark the consequent encroachment, you can see most of the time it will give you the reaction from the consequent encroachment. So that is why it is very important. So let's go to the market. Actually, what is it doing over here? I'll just go to the electronic market because I'd like to see what is it doing over here. So far it's here. I'll go to 1 minute chart. Now, what we have here, we have a very nice fair value gap. This is your fair value gap, okay? Market from where it has actually reacted. Look, this is the opening gap low. I mean the new week opening gap low. So market went. It was traded over there, then it broke down. This is not a random place. This is a place where you have already marked it as a opening gap low. I mean the new week opening gap low. So when price came here, you have to understand that this is the place where you will get some kind of reaction. This consequent encroachment is a place where you will get some kind of reaction. I mean, it is going lower, lower, lower. It is not giving you any kind of reaction. But when it started to give you a reaction, you have to understand what has here, why price came to this level and started to give you a reaction. Okay, I'll go little bit higher time frame so that I can see what is over here. Okay, so I have seen that it has a week over there. I mean, this is the week. I'll mark that as sell side. And if you go little bit higher time frame, I hope I will find something over there. So I got it, what I have. This is the hourly fair, water block. Or if you mark this one as your bearish breaker, you can mark this as your bearish breaker. So if you just mark the consequent encroachment of that breaker, that is also important. The middle of the consequent encroachment, it is also important. So right now I can see it has actually reacted from the order block. In the meantime, it has made a sell side liquidity. Okay, I'm going back to my 15-minute chart, and if you see this low and this low, they're relatively equal low. Market is over here, and if you go here, this is a water block level, the black level, it is the water block level. This is your sell side. Market is here, it went above, traded this water block from 1 minute. I mean, just let me mark it. It has traded this water block, and now it is going to clear this sell side. But will you take an entry over there? I won't take any kind of entry over here. Why? It's because this reaction is happening after the news. You see this big run. This is a very big run. There is a very, I mean, there was no one who traded over here. There was no one. Literally, there was no one who traded over here. Though I mean, I can expect it will clear this sell side liquidity, and then it will clear this sell side liquidity, but I don't have any kind of setup over here. You just can't go to the chart and take your entry. You can't do it. You have to wait some kind of, I mean, framework so that you can take an entry. It has to take some kind of liquidity, I mean the buy side liquidity. Then it has to give you a very nice market structure shift with a fair value gap. Then it will go lower. I mean, if you get that, then you can take an entry to your sell side liquidity. Right now, you will just read the price. What price did? It came to the water block level, and this is the from hourly chart. It has actually come to the water block level. It gave you some kind of reaction. It went above to this water block, and now it is going lower. You see, it came to the water block level again, gave you retest of the water block. I mean, this is the retest of hourly water block, gave you some kind of reaction. Maybe it will clear this sell side liquidity. Then after that, you will wait for taking the buy side liquidity first with a very nice displacement. If you get a market structure shift, you will take your target this sell side liquidity, because this sell side liquidity is here for near about 2 to 3 days. So I am expecting it will be clean today, and this is my expectation, guys. Nothing is certain over here. My expectation is it will clean this sell side. I mean, it will clean this sell side. Now what I can expect is it won't take this sell side before 9:30. That is my expectation. Okay, if I have seen that it didn't clean this sell side liquidity, so you see it has actually cleared this sell side liquidity. So if I have seen that it didn't clear this sell side liquidity before 9:30, then I will try to find an entry setup for this sell side liquidity. Now, if you have any kind of question, you can ask me, because I was just talking. I will, if you have any question, you ask me, I will give you the reply. Then I will go for my analysis. I mean, what I do every day, I will do that. Okay. Just any kind of question, if you have, just let me know. This is your part, guys. If you do, I mean, if you want to know something, you can ask me. Or if you have something, I mean, some kind of doubt, then you can clear that. Whatever you'd like to do, you can ask me. Okay. This is your time. I'm expecting that market will go through this hourly fair value gap, and then it will clear the buy side liquidity. That is my expectation from this news. So no question, or I have the internet problem. In the meantime, if you would like to give me a like, I won't mind. I know it's very, I mean, it's very boring, and really I believe that it's boring. But this is the thing, when you are learning how to read the price. Without this, you can't actually, I mean, learn. You can't learn how to read the price. You have to wait. You have to see this boring thing again and again and again. Now this is the thing. It actually, I don't need this order block level anymore, and this sell side liquidity also I don't need. You have seen it has cleaned this buy side liquidity, now going towards this buy side liquidity. If it has more energy, then maybe it will go to the upper level of this weekly I fair value gap. So when it will go over there, I mean to the upper level of the fair value gap, I will expect some kind of reaction. Maybe it will go over there, then it will come down, or it will consolidate over there. Maybe it will come down to the consequent encroachment of the I fair value gap. But it will trade the upper level of this I fair value gap. It has done its job to the lower level. That is my expectation. Okay. Good morning, brother. No questions. Thankful to be here with you. Okay, okay, okay. Thank you, brother. If you have no question, then I will go to my daily routine. Okay, what I do every day. I do this all every day when I just open my chart. Today I didn't get time because I went outside, and when I come back it was near about 8:30. So I just started my streaming. I didn't get any time. I didn't get no time. I mean no. I mean analysis nothing. So I will do it right now. So what I do every day, I just come, open my dollar index from daily chart and try to understand what price would like to do here. I mean, you just forget this one from the hourly chart. You don't need this one right now. So I can see it has already went into this. I mean the I fair value gap. This is from the weekly chart. Okay, so this is a very energetic run. I would like to see that if it would like to go lower, the lower part of this I fair value gap would be its last stage. That means if it go little bit lower, it will come here to this lower part of the I fair value gap. Then it will go through this consequent encroachment, and if it has more power, then it will go at least to the higher level of the consequent encroachment. That is all I am expecting today. This is the thing. Okay, and this buy side liquidity, i'm not I'm not telling you that it won't go more above, I mean more higher. It can go to this level as well. Okay, I'm not telling you, my expectation is it will go higher. That is all. Okay, where it will go I don't care, I don't know, and I don't need that on as well. Just expectation is it will go higher, not lower. So I will go to the, I mean the hourly chart. So from hourly chart you can see this is the hourly fair value gap, and this is the lower hourly fair value. Okay, one more thing guys, I told you about the breakaway gap. Look at here, just look at this is the thing I'm trying to uh, teach you. No, I'm not a teacher actually. I would like to tell you, this is the thing. Okay, this and this. See, okay, you see there is two gap. This is the one gap, this is the second gap. What I told you that whenever you will see this kind of gap, you will take your entry to the higher gap, and your, I mean your stop loss will be to the lower, I mean the below this consequent encroachment, because if market would like to go lower, it will go to the consequent encroachment of the lower fair value gap. So you see price actually came to this hourly fair value gap, then it went lower and to the consequent encroachment of this lower fair value gap. That is very important. That is the thing I am trying to tell you. I mean you have to keep it in your mind that if you have ever seen this type of two fair value gap, one just above another, you have to mark the consequent encroachment of the lower fair value gap, because this will act as a breakaway gap. What is breakaway gap? Breakaway gap is kind of a gap which will actually help you to determine that market will go higher. I mean market will go to your direction, and I mean if you see this gap is open, still open, the price didn't trade the whole gap, then you can decide that market will go and take this buy side liquidity. This is kind of confidence. When will you get this confidence? How do I know, or how can I expect it will go through this hourly fair value gap and clear this buy side liquidity? I got this because I have seen this thing happened over here. It has traded the consequent encroachment of the lower fair value gap and then started to go higher. If I have seen that it has actually closed total, I mean a week just came to the lower part, I mean here to this lower part, total gap is closed, then I would say, okay, maybe this buy side liquidity will be our target, then market will hanging around over there. Maybe it will just close somewhere here. But when I have seen this portion is still open, there is no trade, this is indicating that market will go higher. That is how I try to mark my chart where price could go, where this is the thing. Okay guys, I think it's clear. If not clear, then just ask me your doubt, I will try to. Okay, bearish breaker, does it always have to have two candles to make a? Okay brother, bearish breaker is something, how can I explain that? Breaker is something like that. Okay, let me just mark it. You see, high, low, higher, high. Okay, this is your breaker. I mean, mark it. Let me mark it. This candle will be your breaker. Now, if price can go through this, I mean this candle range, if it can go through this and then came back to this gap, this will act as your breaker. Consequent encroachment of the breaker, most of the time you will see it actually react, I mean it can go or reach to the consequent encroachment of the breaker. Most of the time you will see that, and then it will go lower. That is the breaker. This is first rule. There is so many things which is very difficult to understand. If you don't understand the price action, then it will be very difficult for you to understand how breaker works. I need more time because I have to make this video about breaker. I can't just tell you how it works like that way. Everyone will show you this. This candle is your breaker, so this is how it works. But actually, it doesn't work like that way. There is something behind the breaker. That's why ICT told you 95% time you will see breaker will work. But whenever we mark the breaker, we saw sometimes it works, sometimes it actually doesn't work. That is the reason I'm telling you it is not possible for me to talk about the breaker without any example or without any, I mean, without any preparation. Okay, S- trust me brother, there is so many things behind a breaker. Breaker is kind of my favorite. I really love to trade breaker. I don't trade macro, it's too easy. I don't like easy things. So breaker, one of my favorite things. I will talk about that, but I need some times. Right now I'm really too busy. Stephen, please, how long have you been trading? How do you cope with loss and emotion during trading? Okay, it's a very nice question, brother. I should talk about that. I am with ICT, I'm near about 32 months now. I mean, when I came to this October, the October is started, I am already 32 months. I'm trading ICT concept. Okay, before ICT, I just tried maybe for near about 5 to 6 months the retail things, but I really didn't understand anything about indicator or something like that. I really don't understand about that type of indicator things. I think it's just useless. I'm sorry if anybody trade depending on indicator. I'm really sorry for that, but this is my opinion. Okay, I'm just sharing my feelings. Whenever I tried by this kind of indicator, I saw that there is no connection with the indicator about this market price. This is the price action which you have to understand by yourself. No indicator can indicate you the the price action. I mean, how do an indicator will know where price will go? It is not possible by indicator. You will see this. You see this equal highs. You have seen it went above. It has cleared the sell side buy side liquidity. Now I'm expecting it will go little bit lower. Maybe it will go to this. I mean, the lower part of the weekly I fair value gap. That is my expectation. I mean, I would like to see it will just came here, then it will go and clean this buy side liquidity. That is my expectation. Now, how do indicator will know where it will go? It is not possible. I think this is my expectation. Please, this I'm not attacking any of use. I mean feelings. Okay, I'm just sharing myself. My what can I say? My opinion. And what about loss? I actually blown up three accounts. I mean funded account. First, I blew up. I mean the FTMO. So far, I remember. It's kind of maybe 1.5 years ago, I think. Yeah, it's near about, yeah, something like that. Maybe at the first of 2022, I blown up my first account from FTMO. I got that account by ICT stuff, but in that time, I really doesn't understand what is price action. I saw some videos from ICT, and I thought, okay, I understand everything about price action. I went to the market and I saw everything is very difficult. Because I don't know how price will act, where price will go, where price will stop. Like now I'm teaching you this. Trust me, guys. You don't need to think. You just need to take some notes. When I tell you about this, okay? This is two fair value gap. This is the higher fair value gap. This is the lower fair value gap. You will take your entry to the higher fair value gap, and you have to mark the consequent encroachment of the lower fair value gap. Your stop loss should be just below the lower fair value gap. This is the thing, you have to write it down. If you don't write it down and you just watch my video and think, okay, you will you will remember this, you are just wasting your time. Trust me, brother. This is how I waste near about 6 to 7 months when I started ICT stuffs. I just was, and when I went to my chart, I couldn't mark anything. It was like I was just depressed. Maybe I can't do it, maybe it's not possible for me. I was thinking like that way. It's because I never take notes. I just watch the video one, two, three, four, 5 times, and then I thought started to think that I will go to the market and I can do the same thing. But then I find out after 6 to 7 months, wasting lot of I mean I mean the energy and everything. ICT talks to. I mean he talks a lot. All of them are information with information. So I'm not telling that he talks too much, but all of his talking is information, kind of information for me actually. So I waste too many time by just watching. Then I started to take notes whenever he talked something very important like this. Though this one he didn't talk, he didn't tell. This is my observation after watching price again and again. So this is my thinking. Okay, so I started to take notes, and what I did, whenever I saw his video, I marked the same thing. What he marked in his chart, I marked the same thing. And slowly, when I started to do this, after 1 or 2, maybe 1 or 2 months, I started to, seeing the fact before it happens. So this is the thing you have to do. If you just watch the video or live stream, then trust me, brother, you are also wasting time. It won't help you in any way. You will just see everything is very simple over here. It went above this buy side liquidity. Now there is a hourly fair value gap. Maybe it will go through this hourly fair value gap and it will clean the buy side liquidity. It is very easy when someone will show you. But when you will be inside the market, I mean, like this, you can't do you can't mark it. You don't know where price, like this way. Okay, how do you know where price went from here to here? How do you know where is the level? You see, all of them are very unknown right now without the the annotation or something, if you say. So you don't know where price went, you don't know where price will go. Why? It's because it's very new. You didn't do the thing I told you to do. Did you take the notes about this? Or I talked about the fair value gap yesterday. Why I marked that 1 minute fair value gap, why it is important, how you will notice that fair value gap will be important, not others. Okay. So I'm sorry, Stephen, I didn't actually give you the exact answer yet. I just went to another topics. So you asked me how to cope up with the loss. When I started to, I blew up to 2 or 3 accounts. I don't remember actually. FTMO, but the first one was FTMO, and it was $10,000 account, and I got it. Like I took maybe 2 or 3 trades, and luckily I passed the first phase, and the second phase it takes like little bit more. And then anyhow, I just got that FTMO account, and I was so excited when I started. I just got that account. I forget every rules. I went to the midnight, started to find. Tried to find a setup. I was just gambling. Okay, I whenever I get time, I went to the chart and started to look for an entry. At the last, maybe within 1 or 2 days, I lost that account. And in that time, I was actually passing a very hard time. It's because I was in Denmark in that time, and I had to manage my tuition fees. So everything, so I was very depressed, and I thought, okay, trading is not for me. I can't do it. It is not for me. So then maybe uh, 4 to 5 days, I stopped to look at the chart. I still remember I was so I mean, what can I say? It is the feelings when I lose my when you will get first time funded account, you will be so excited. Trust me, brother. I don't know you have already a funded account or not, but whenever you will get your first funded account, and if you can make a right decision, then you will get the real money. You will be very excited, and if you get the losing trade, your mind will be just what fucked up. Trust me, brother. You will think I have to mitigate my loss. I have to do it right now. I don't have any time. This is my last chance, or something like that. I was thinking like that way, and I blew up my account. So after that, 4 to 5 days, actually, I I thought this is not for me, and I can't do it. And then next time, maybe after 2 to 3 months, tried one more time to FTMO. I failed that time. Then I find out that my Forex fund is more cheaper. So I just went to my Forex fund, and unfortunately, I didn't get the account from there as well. All the time, I was thinking this is not for me. Now I'm talking in front of you guys. I'm just showing you some levels. I'm not a pro. Trust me, I'm not a pro. I know nothing about price action. There's some people who are really very good, though I don't follow any of them except ICT. But I know there are some people who are very good in price action. So far, I now understand that, yeah, I understand the price action little bit. I know where price will react. And when I started to understand this thing, it happens suddenly. Trust me. When I mean, doing the same thing, I tried to take the notes and started to annotate my chart like ICT did. But then I started to see that whenever I was expecting something, price should work that way. Like here, I told you that it has made this sell side liquidity. Maybe it will clean the sell side liquidity. Then it will take some kind of buy side liquidity. Then you will get a very nice market structure shift. You will target for this sell side liquidity. I told you before it happens. Okay, so I am expecting that before 9:30, if this sell side is not taken, I will expect after 9:30 or using 9:30, market will go to this sell side liquidity. Remember this. Okay. Bhimenji, I'm fine, brother. How are you? Can you explain new week opening gap and new day opening gap? This my world. I will talk about that, but just give me share my experience. I'm a little bit emotional. I would like to actually complete this experience. Uh, I would like to share it with you, and then I will talk about the new week opening gap and the new day opening gap. I'm sorry, brother. Just give me some time, okay? So when I started to lose every funded account, and it was like hopeless. And suddenly I started to see that okay, market actually started to listen to me. It was the feeling, some kind of okay, I'm kind of guru or something, if you say guru or something like that. So I start. I mean, I went to the chart again and tried to do some kind of paperwork. And this time I was very serious. I thought, okay, I don't care about anything. I have to first control my emotion. If I can't control my emotion, I will never be a consistent profitable trader. What I did, whenever I was thinking, okay, market could do it. Like here, I told you it will clean the sell side liquidity, then it will try to take the buy side liquidity. I mean, it will clean some kind of buy side liquidity, then give you a very nice market structure shift. That is the framework, okay? But when I traded first time, what I did, I tried to catch this run. I also tried to catch this run. Then when the setup will happen, I also tried to catch that run as well. What is the result? I took, maybe this one was right, okay? Maybe just think like that way. I took this run and I was profitable already. When I started to take that run, maybe it didn't actually clear the buy side liquidity. Instead of it went lower, I took my loss. So I was very afraid when the real setup formed to the chart to take that entry. I was very afraid. So I wouldn't take that real setup. That's why I was promising myself that I will do the paper trade and I will control my emotion first. If I can control my emotion, maybe I'll be the winner over here. So after so many times, near about 5 to 6 months, it takes 5 to 6 months for paper trading actually. I blown up so many paper trade account. I'm not telling you that from the first day I was profitable and I'm just telling you the truth. I blown up so many paper trade account. I went here, I just reset my account and started to trade again. That's the thing I did every day. And suddenly when I have seen that, okay, if I can control to, I can stop myself to take this entry. If I can stop myself, then I will get the real entry. That is the point where when everything started to change. I mean, from there everything has changed. And now, if you think you would like to catch every run, if you think you will try to catch every day, you are also in my position. When you will start to trade the real money, you will think, you will see, actually it will send you to the losing portion, okay, not the winner. You can't be winner that way. You have to read the price. What is price doing over here? That is the news trade. The news run, okay? All of these are empty. There was no trading happened over here. Now price came lower. It has made this equal low, relatively equal low. It went above to this order block level. Just let me put it over here. Order block level, then it went lower, take the sell side liquidity. Now it started to go going higher, okay? Why it is going higher? Where there is a very clean sell side liquidity. Lot of people actually took buy from here. So price should go there, but it didn't go there. It started to go higher. Why? It's because I still always tell you about time and price. You have to think about the time first. What time is it now? It's near about like 9:30. It is actually going higher so that people can think, okay, maybe it will go and clean all of this buy side liquidity. So it is going higher. So take buy. Whoever will see the market over like that way after this big run, they will think market is already in a in very low, okay? So market need to go higher, so they will take buy from here. Where is it their target? Above this swing high. This is their target. So they are actually taking buy over here. Why market is going above? We know actually market is going above because this is just before 9:30 opening. So market actually send the price to the sell side liquidity by using 9:30. Guys, I'm just telling this is my expectation. This will happen, I don't know this will happen or not. I'm just telling you my expectation. Market is going higher and it will actually stay over there before 9:30, and at 9:30 you will see some kind of run that will actually trade this sell side liquidity. And about my emotion, right now I don't have any emotion. You know, guys, after taking my, I mean, top step, I just traded maybe after 2 weeks. Yes, the day before yesterday or 2 to 3 days ago, I took a macro entry. Though I never, I quit macro entry. This is too easy. When I started to trading, at that time maybe 6 to 7 month, I traded macro entry, and then I just quit macro because this is too easy. In my opinion, this is for baby, or I can, you can say, under 18 people. There is no challenge, there is nothing. You just will see how did it work, and you will take your entry. Nobody will tell you this strategy, though. Even you won't find this strategy. And I think so far, this is, you can say, 100% working. Okay, yesterday, even NFP, yesterday there was three chance yesterday as well, and all of them were profitable. I tweeted it. If you were in my Twitter, you already know that. Okay, so that is actually too easy. There is little bit chance to get losing trade. That's why I quit that one. But right now I don't have any emotion with the price, because if I take a loss, I just stop and try to find another opportunity. If I see anything very, obvious, then I took entry and mitigate my loss. And if I take like $200 loss, just this for example, if I take a $200 loss, my target is the next entry. I target $200 only, not $201, because I believe if you can mitigate your loss, you can grow your account. If you would like to take, I mean, mitigate your loss, then would like to take profit as well from one trade, then the problem will begin. Then you will see, actually, you will grab more loss. That is the thing, guys. So if you ever take a loss, you will try to, I mean, the next entry, you will try to mitigate your loss. When you'll see your loss is mitigated, just close the trade. Even if it possible, just close your chart. If you can take one winning trade one day, just close your chart. Don't stay in front of chart, because if you stay, you will think that, okay, maybe I will get another, maybe I can do this. This is also more obvious entry. Maybe I can take more money from here. You don't need that. Slowly, it takes time. So slowly, you will see that you are better than me or someone else who are trading now. You are better than them. And in that time, if you know where price would like to go, you will take entry. You will catch this move, you will catch that move as well. And when the real move will happen, it you will catch that on as well. So just give give yourself some time. Okay, and new week opening gap and new day opening gap. Okay, brother, new week opening gap, just let me go to the hourly chart. Okay, Stephen, are you like my answer? Did you get it? I don't know, I talk too much. So if you understand my feelings or something, just let me know. Okay, Stephen. So this is the candle which has closed Friday at 5 p.m. This is the closing point. I mark this as a new week opening gap low. I write it down opening gap, but this is actually new week opening gap. Okay, you have to write it down in your way. I did it because I will change it when I will see some kind of opening gap, very nice opening gap. Then I will change the name. But until now, I know this is the opening. I mean, new week opening gap range. Can you show us your Fibonacci lines? 50%. Okay, brother. I have this one. This one is for 50%. I mean, you understand, right? This is the 50%. This is normal, and I mean 50%. And I have the normal as well. I mean, this is the normal one, and there is some. I mean, let me show you the style. Here is some level, and you can see 79% minus 2.5 minus 3 and minus zero point 0.5 minus 2 minus 1 1.5. That is all the level from. I i mark. I use this one, I mean this Fibonacci, when I see there is no information from behind. I mean, market is somewhere where I don't have any information from past. Okay, then I use this Fibonacci, and most of the time you will see I do actually use this 50% on for marking the consequent encroachment. And that's all. I think it will be helpful for you as well. Okay, did you mark the new week opening gap according to 1 hour chart only? No, brother, Bim, I actually marked it from 1 minute chart, but here I mean, it is helpful for me. It will be easier for me to show you from hourly chart because it's already too fast. So I don't want to go to 1 minute chart and then show you. Okay, you are most welcome, Stephen. Thank you because you understand. Okay, so where I was in the new week opening gap and new day opening gap. Okay, so this is the new week opening gap, and always you will see that I mark the consequent encroachment. I really love that because most of the time you will see the reaction you will get from the consequent encroachment. And if you go to the 1 minute chat, you will see a lot of reaction from the consequent encroachment. That is why always, if I have ever seen some kind of big gap, I mark the consequent encroachment. I mean the 50% of that uh, gap. Okay, and new day opening gap is something I will show you here. If you go 1 minute chart, and just let me go a little bit back. Okay, okay, okay. If there is a gap, then I can show you. Otherwise, it will be tough. So here, oh, where did it go? Okay, here. You see this candle, this candle opening, this candle opening, and this candle closing. 4:59 candle closing and 6, I mean 18. You see this the time. This candle's opening. This is the opening gap. I mean new day opening gap. Now look at the gap. I didn't do any of this today. It's because I was outside, so I didn't get any kind of time to mark all of this. You see, how did it work? Whenever price came to this gap, it reacts. You see, it reacts very nicely. It has reacted. Just look at this. You see, how did it work over there? Very nicely it worked. Whenever it came here, it reacted. That's why that is also very important. But new day opening gap, you can just close this one after that day. You can do it, but maybe I recommend you to keep this for 1 week. Okay, every day you will mark the new week open. I mean new day opening gap, and you will keep that in your chart for that week. I mean you mark this on Monday, you will clean this on Sunday. You mark this on from Tuesday, you will clean this on the next Monday. Do you understand? But new week opening gap, you have to keep this for at least 5 week. At least 5 weeks. So you will have so many new week opening gap on your chart. Always you will get that in your chart. I don't have this one because I actually write down the price level from the previous one because we just moved NQU to NQZ. So that's why I didn't mark them again. I just write it down to my notebook. The level when I saw price will be there, I will just mark them. Okay. So that is the new week opening gap and the new day opening gap. Oh, sir, I came in later 30 minutes. I'm watching it late. No problem. Apostolo, you're my brother, so no problem, brother. Yeah, BIM NG. New day opening gap is obviously important. I told you, I just showed you. Okay, you see, this is the new day opening gap. Okay, this is the new day opening gap, and from look how price reacted. See every level how price reacted this new day opening gap. Just look at this. You see, it came to that opening gap. It either it gave you a retracement. I mean, look at this level, guys. Why price just came here and stopped? It's because it's new day opening gap. And lastly we got this. So I think this new day opening gap is no more important. Okay, so this is my thinking. But I will see how 9:30 will open. That is also important for me. I will just need to go over there. So far we can see here, and just a second, let me go over there. So this is the level, and maybe we'll have a very big opening gap, and I don't need this opening gap anymore. That is not important right now. And this sell side liquidity level as well, this that is also not important. This order block level is also not important. Right now I'm looking for this sell side liquidity. What is that? Okay, I'll just clean it up. This sell side liquidity, that is important for me. Okay, just go to the electronic trading hour, and I'll close this order block as well. It's just before the 9:30 opening. I mean, after 1 minute I will get the 9:30 opening. I'm expecting that market will go lower and clean the sell side liquidity. That is my expectation. Okay, I'm not telling you to that that will happen. I'm just expecting that market will do that. What else it can do? It can give you a very fake run. I mean, if you see kind of very big run to the above, it will go to the consequent encroachment. Let me just mark the consequent encroachment. That is the consequent encroachment of this fair value gap. So what I can see, at 9:30 it will go to the consequent encroachment, or maybe 25% of this gap. Then it will, I mean, it will break lower. But I really would like to see that market will go lower. That is my expectation. Okay, being everything is important, you want to be, if you want to be independent. Yeah, this is my world. That is the thing, everything is very important. I mean, why I mark this kind of level, this monthly fair value gap high, or this new day opening gap, this month, I mean, opening gap, why I marked them? I marked them because if you see like this, you don't know where price will go. You have no idea. That's why I mark all of them, all I mean all of the places, so that I can understand price will go there and it will react in that specific level. It will react. I will try to catch that reaction. That is my intention, to understand. That is why I have so many level over here. You see this sell side liquidity. Why I marked it over here? I didn't know it. I mean, I don't need to mark it over here. I really don't need it. But I marked it here because this will make me confident that market will go to this sell side liquidity. I have a level. You see this opening gap, or new day opening gap, new week opening gap. Whenever price will go to this specific level, high, consequent encroachment low, or this gap, I will expect some kind of reaction. Think about here. Just let me show you. Right now, just give me to use this one as well. Okay. So this is for your understanding. If you understand, let me know. If you don't, then just leave it. Okay. I'm just showing you. I know this is a place where price can react. I saw price went above it, breaking. It has broken this one. Okay. I was waiting. It went. I mean, it went above to this gap again. Look. Now it actually came to the upper level of this. I mean, this opening gap. See, the very next candle, it came to this level. In the meantime, it has made this relatively equal high. I'm just showing you an example. Okay, this hindsight I know, but I'm just showing you why this is important. So you see, the very next candle, it went above and cleared the buy side liquidity. I mean, the buy side liquidity has taken already. Okay, now my what I will think, okay, if market would like to go higher, then it will stay above this. I mean, new day opening gap, this gap, this place, this price will stay above here. It won't go lower. If price would like to go lower, then it will go through this again, and it will go, I mean, it will give me the market structure shift from here. That is my expectation. Okay, that is my expectation. So let's see what price did. It came again, just near the new day opening gap, and came back to the consequent, I mean, the gap again, go through this gap, but failed to break this gap. See, look, did price can I mean, it didn't break this gap. You see this gap. Yeah, we can go, and all of you know that I don't really care about the week. I care about the bodies. You see, the nobody close. I'm sorry, nobody close below this. I mean, new day opening gap low. Nobody close below this. It went higher. So now, if you just mark, I mean, if you have find some kind of entry over there, maybe you will take that entry or something, whatever. That is why this gap is important for me. I will expect some kind of reaction from here. I will expect some kind of reaction from here. When price will be there, I will expect some kind of reaction. That is the thing. That is why I actually mark this kind of level, and you have to do the same thing. If you don't do it, and you will see, okay, I am in the middle of the ocean. Okay, what happened? I don't have charge in my laptop as well. I need to put my charger in. And just a second, guys. Okay, I'm plugged in. So we can see silver prices over here. Let me just check the DXY. What is it doing? Let me go to the 50-minute chart. So price actually and came here, traded this fair value gap. I am expecting higher price now. I would like to see it will go higher. That is my expectation. It will go higher. And let me just mark this one, the consequent encroachment. So I am expecting that price will go higher now from DXY. And if I go to the, okay, here. Now, some of you guys actually asked me about how do I know which I am, I mean the I fair value gap. Now, I will talk about little about, I mean the I fair value gap, inversion fair value gap. Okay. Right now, you have seen this, I mean, it has cleared this sell side liquidity from there. Just let me mark it. It has cleared the sell side liquidity from here, give you a very nice market structure shift. If you don't write it down, you will learn nothing. Trust me. This is just Netflix. And at the end of the day, you will see you know nothing. So that is the market structure shift. There is your two fair value gap. Okay, one fair value gap is here, and the fair value gap is there. Look, guys, this is very important. This is the second fair value gap. What is the rules? You have to take your entry to this fair value gap, and your stop loss will be just below the consequent encroachment. Okay, maybe your target is somewhere here or whatever, I don't care. Now, this is your setup. Okay, you got this very nice setup. Leave it. If you have seen it has worked, you are not taking any entry, you are just reading the price. If you have seen this worked, I mean it actually traded that way, that's fine. If you have seen it actually go through this fair value gap, the lower fair value gap, it went through this, then this fair value gap will be very important for me. Why? Then I will expect it will use, I mean, let me just do the things, it will be easier for you to understand. Okay, you see this consequent encroachment, that is not. How do you know which fair value will be important or not? I told you this, I mean 2 or 3 days before. So I'm telling you again, if you don't write it down, you will know nothing. Okay, so I when the price will close below this consequent encroachment, I don't need this one, so I'll just remove it. If it can close below this fair value gap, I will expect that this fair value gap will act as a I fair value gap. How do I know this fair value gap will work as a I fair value gap? I will expect no body will close above this consequent encroachment. Nobody. I mean, we can go above, we can go like here. I'll just show you. Look, the body has closed just below the consequent encroachment. I mean the lower part of this fair value gap. Now, any kind of candle can go above this consequent encroachment. If I have seen that, okay, market is failing to go above this consequent encroachment, then I will be confident, okay, this will be act as a I fair value gap, inversion fair value gap. Trust me, brother, nobody will tell you about this. Nobody. If you have already find about I fair value gap, I mean the inversion fair value gap video, you won't see this. Trust me. If you get it, just give me the link. I will see. But nobody will tell you the real thing. How do you mark the I fair value gap, or how do you I mean mark everything? And whatever I tell you, I can promise you nobody will tell you. You see this candle, the very next candle, it went above the consequent encroachment, but the body is just closed below this. I mean below this consequent encroachment, and the very next candle it started to go lower. I will wait a little bit. I will wait. Now I have got this. Let me just show you this market. I mean, just let it go. Okay. Now this is the thing. This one is now I fair value gap. It will act as I fair value gap. What does it mean? It means price wouldn't want to go higher. It would like to go lower. And how long it can go? You see this sell side liquidity. This is also sell side liquidity because every below every swing low there is the sell side liquidity. So it should go at least to this sell side liquidity, brother. And this is, trust me, this is not for confirmation. This is my just my thinking. Okay. So if you any of you just trade the real money, I won't be the responsible. And if I can know that you trade the real money, I will say you should just unsubscribe me, and I really don't want to see you in my channel. That is the thing, brother. If you do it depending on my analysis, okay. I fair value gap is related with uh, brother, somehow i didn't I didn't see your message. I'm sorry. So this is the thing, okay. This fair value gap is very important. Why? Because I was expecting the 22 YT model should happen over here. I am not ready to take any kind of entry, okay. No, brother, I fair well everything is related with time. Everything is related with time. But I fair well the rules. This is one rules. Okay, this is not everything. This is one rules. You see, it has taken the sell side liquidity, gave you very nice market structure shift, gave you one or two whatever. I don't care. Just think there is no fair value gap. Okay, there you have only one this fair value gap. So it should actually, I mean, price, whenever price will come here, it should go higher. But it didn't go higher. It went lower. It closed just below the fair value gap. You just mark the consequent encroachment of this gap. And the very next candle, it tried to go higher. It failed. The next candle, it also failed to go higher. And instead of that, it went lower. This fair value gap is now important for me. And you see this big run. After this big run, I will think that okay, market will go more lower. Why price came here and started to go higher? Because this is also a fair value gap. This is just a reaction, okay? People will think market will go higher, so they will take buy. But this is kind of fake run. Price doesn't want to go higher. Why it is going higher? Because there is the inefficient place. I mean you can say this is the I fair value gap. This is my expectation, okay? This is not for confirmation. Price will go there and it will reject the price again. That is my thinking, because this fair value gap is very important for me right now. I won't take any entry. Why I won't take any entry? Because I am in life and I don't want to influence you to take some kind of entry or something like that, because I want you to learn the price action. How do you read the price? How do you know when is the right time to take your entry? It's just before the macro. You see 950 to 1010 macro, just before the macro. Would you like to take any kind of risk over there? Because you know in macro it will make some kind of liquidity and then it will take the liquidity, then it will give you the market structure shift, you will take entry over there. But if you would like to, I mean This is the thing, guys. You have to understand I fair value gap in that way. Now, what else it can happen? This is just just telling you this because you will need this. Sometimes you will see price actually go through this, it will go through that again. I mean, some people will think this is the I fair value gap, so they will take their short over there, and then price will go higher, stop them out, and you will see the next time this will act a very nice fair value gap, and you will keep this one until this one is not balanced. Okay, until this one is not balanced, this is very important. So that is how you will use your fair value gap and balanced price range as well, also inversion fair value gap, all of them you have to read the price like that way. You see it went above, failed to go above, I mean it failed to close above the consequent encroachment. Still now this is, I mean, this is a very important place for me. I hope, I mean, I'm not telling you this is my entry, I'm just showing you. Okay, if you took this entry, and now I will say you the breaker as well, and if you do this, that will be a very nice trade. I'm not telling you to this is my entry or this is something. If you take this entry, you will take a loss, trust me. So if you see this entry, why I'm more confident about this, what the, why this is important for me as well, because uh how can I say that, I shouldn't talk about that. So I'll just skip that on. I will talk about that later, but trust me, it is not the right time to talk about that. So because I don't want anyone to just go and take some kind of risk. I'll just close this one as well. I shouldn't do it as well. So that is my expectation that this one will actually act as I fair gap, and now price is hanging around over here is because it just before the macro. That is the only reason. And another reason is it is also happening just after the NFP news. You have to remember that after the big news you will see some kind of manipulation, it will happen. So if you see this kind of manipulation, or if you would like to take your entry over here, most of the time you will take the losing trade. It's why, it's because it's just after the news. That is the reason I told you before starting this, I mean, session. I told you if you just skip your morning session, at the PM session you will get better price action. So now it has actually went through this fair value gap. Now this fair value gap is very important. You have to keep this on your chart. Why? First time when people thought market will go higher, they took buy to this fair value gap. What price did? Price went lower, stop them out. Now later people will think, okay, it will act as a I fair value gap. So they took sell, they are stopped out. As well they are stopped out. Now this is the fair value gap which we'll use again and again and again. I just told you, mark mark this fair value gap. You will see how important this fair value gap will be. Okay. Hmm, Benjamin, what you read and how you read before and after 20-minute macro, and then means is who is interval read in the range of how many minutes before and after 20 minutes macro. Brother, if you are talking about macro, macro need nothing. Just you have to mark the 20-minute, I mean 9:50 to 10:10. You have to go to the 15-minute chart. If you have seen a very nice 15-minute high and 15-minute low above the, I mean 15-minute high above the current market price and 15-minute low, just below the current market price, you will go to the 1-minute chart, wait for liquidity take, and then market structure shift with a very nice fair value gap. You will take your entry. That's all. Okay. So macro has nothing related with anything else. The macro is just macro. Macro has nothing. In this example, you showed that was after the macro time to 310. What macro time you see there? Where, brother? I didn't talk about macro. I just told you that it's 950 to 1010 macro. The first macro of the day. It's just before that macro. It is happening over here. It's just before the macro. So every Every time you will think, you will just be I mean, you have to be very, very careful before the macro. Inside that macro, there is a setup I have already taught you. I have already disclosed everything about the macro. So you have to understand that macro means price will take the energy inside the macro, then price will run. So just before the macro, you have to be careful. Always, you have to be careful. Okay, this is very important. Hi Agma, how are you, brother? Now, if you don't mark this level lookup in your chart, guys, I'm sorry. I just need to take a call. I'm just coming back. Okay. Guys, can you hear me? I just need to take a call. It was very important for me. So if you can hear me, just let me know. Okay. So we are inside the macro, but I really don't want to talk about macro. If you guys, okay, now you can do one thing. If any of you are in the mini S&P chart, I mean, if you have multi-monitor, you can just open the Nasdaq chart and the E-mini S&P chart as well. Just let me know, is there any setup in the E-mini chart? I mean the macro setup. If there is any macro setup, then I'll just switch my chart from Nasdaq to E-mini S&P. But so far we can see prices over here, and my expectation is it will go lower, clean the sell side liquidity, this one, it won't go higher. I don't want to see higher price, I want to see lower price. In the meantime, there is also this high is important. I mean, this is the, I mean, buy side liquidity. Why? They are the relatively equal high. They are relatively equal high. So what price can do, it can go above this buy side liquidity, trade the consequent encroachment of this fair value gap, and then can go lower. But that is low probability. I really don't want to see that. I want to see that market will go lower and clear the sell side liquidity now, because we'll be in the silver bullet soon. So I really would like to see that. Okay. No, I just muted it. It is because I need to take a call. It was very important for me. So I had to mute the chart or icon the live. That's, I'm very sorry, brother. It high probability to stay range until 11:50 macro. No, brother. Agma, it's not like that. Every macro has their own rules. Okay. If you look at this macro, I'm not telling you that to take this entry, because I told you before the session Don't take any kind of entry today morning session. It's because it's just after the NFP. It will be manipulated by human beings. Okay, there is no, I mean, algorithm right now. Some people actually running the market right now, and it happens before and just after every big news. Every every big news you will see this kind of, manipulation. So that is why I'm telling you, I'm suggesting you not to take any kind of risk at the AM session, and at the PM session you will get more clean price action. So if you can control your emotion, or if you are not afraid of missing the trade, you will be the winner at the end of the day. Okay, and if you are really afraid, and if you think, okay, I have to take a entry, you are not very patient, then losing trades are waiting for you. So that is the thing, brother. Are you trading on the 1 minute? So guys, can you see it? Yeah, I'm in the 1 minute. I always take entry to the 1 minute chart. I'm very impatient about going to the high time frame and take entry, hold that for a long time. Most of the trade I took, it takes near about uh, how many times it takes? Maybe 10 to 15 minutes maximum. So I take 1 minute trade, I take entry, and I just close it. That's all. So far, I can see there is a buy side liquidity and there is my sell side liquidity. This is from, let me to go to the 15-minute chart. If you go to the 15-minute chart, this is the 15-minute low, this is the 15-minute swing high. Okay, that's why I marked both of them. And when price came to this, so far we have seen that we have taken the sell side liquidity. You have seen this is the sell side liquidity has taken. And is there any swing high? No, I don't see. So I need a market structure shift now. This is for macro, okay? And if any of you guys are you have multi-monitor, please open the E-mini S&P chart and let me know if there is any setup or not, okay? And just let me know. Eh, if you just give me some loves or something, I don't know. Uh, Maybe it's better for YouTube algorithm. More people will know about this channel, something like that. I'm not sure about that. Stephen did this sometimes, so I just remembered. So if you just give me some love or like or something, that will be really grateful for me. I mean, helpful for me, and maybe more people will learn about. No, I mean, they will know about my streaming. Uh, that will be helpful. Okay, so if you don't mind, you can do it. We are consolidating over here. So far we have taken the buy side, I mean the sell side liquidity. In the meantime, it has made the relatively equal low. If you see this low and this low, okay, this low, it has made the relatively equal low. And it has taken the relative equal low, I mean it has taken the sell side liquidity so far, and no buy side has taken. So if I get a very big run to the lower part, I won't take entry because this is for macro. Okay, I'm not talking about my higher time frame. My in my higher time frame analysis, I want to see that it will take, I mean it will close this sell side liquidity and this sell side liquidity. This is from my higher time frame analysis. Okay, but for the macro, I need to take some buy side liquidity first. Then if it has given me any kind of market structure shift to the lower part, then I will go for the, I mean buy side liquidity. Okay. So far we have seen it has cleaned this sell side liquidity. This is my sell side liquidity taken. Now I need a market structure shift. Though I don't have any swing high over here that I can mark as my market structure shift. So if market can make any kind of swing high over there, and then it can break that with a very energetic run, I mean the displacement, then I will go for buy with a fair value gap, obviously. But until then, I'm not sure about taking entry. Okay, so there is two things. First thing is, if you just depend on your high time frame analysis, market would like to go lower and try to it will clear the sell side liquidity. That is your expectation from high time frame, and it is inside the macro. if you just would like to depend on macro, then it has to take some liquidity first, then it will give you the, I mean, the market structure shift with a very displacement and a fair value gap, then you will take your buy to that fair value gap for 20 handle. That is for macro. Now you can ask me, brother, then what should I do? Should I wait for the macro entry or should I wait for the higher time frame analysis? When price will come into this macro, just 950 to 1010 macro, when price is just inside that macro, no analysis will work inside this macro. Trust me, brother. No, there is no analysis that will work inside this macro. You can't just, I mean, compare anything with the macro. This is kind of uh, all in on. Okay, it is itself. There is nothing you need to trade this macro. You just need to follow the macro rules. That's all. So far we have seen it has cleaned the buy side. I mean the sell side liquidity. Now it is going higher. It is trading. You see this fair value gap. I told you already. This is the fair value gap which will play the important role. Is there any high time frame macro? Uh, what do you mean by high time frame macro? Macro is the time. I mean, macro is 950 to 1010. This time is the macro. This is not higher time frame or lower time frame. If you go to the 5 minute chart, you will get only four candle. In four candle, how do you define your entry? I mean, how do you find your model? If you go lower than 1 minute chart, then you will get, I mean, you will have more opportunity to take entry. So you can see it has actually, I mean, make the equal highs over there. Guys, do you remember how many winning trade we have until now? I think yes, if you just skip the yesterday's winning trade, then we have 12 winning trade. I think so. I don't remember. So far we have the sell side liquidity taken. We don't have any buy side liquidity taken yet. Now you see, if anyone will think, okay, it has actually shifted your market and this is your fair value gap, you will take your entry. I won't be with you because this high is not qualified for shifting the market structure. Okay, that is why I won't say this is my market structure shift. I won't take my entry over there. You have to be sure that when you will get your market structure shift. If you don't get any kind of market structure shift, you don't have any kind of trade. And if you are really confused about market structure shift, you can go to the, I mean, video, I mean, in my YouTube channel. From there, you will find study section how to avoid losing trade. Trust me, guys. Only this video can help you to avoid near about 100 losing trade. If you don't trust me, you just go over there, check that out, and then I know you will come back and you will give me thanks. I know that. So it's 10:01. Still now we don't have any kind of, I mean, trade setup. We are waiting for the trade setup, but we'll see how it works. Okay. If we don't have any kind of entry setup, then we won't do, because we know we have three more chance today to take an entry. And one more thing, guys, I forgot to tell you about Friday. Friday is the last day of the week, and most of the time you will see Friday price action is little bit conservative. I mean, if it runs too fast. If it doesn't run, then it just started to consolidate in a very small range. That is why you have to be careful when you will trade the, I mean, Friday. Okay, you have to keep remember everything, and the best way is to take notes. Just bring your notebook, write it down. If you don't write it down, you will forget. Still now we don't have any kind of trade, I mean trade setup. We have 8 minutes left. If we get any kind of setup within 8 minutes, then we'll go for that. I mean, we will look for that. Otherwise, guys, can anyone can open your e-mini S&P chart and let me know, is there any setup as well or not? I mean the e-mini ESZ 2023 e-mini S&P. Is there any entry point? I mean setup or not? Okay, just if you can just let me know that. If there is a setup, I will go over there. Let me check the DXY. DXY is also hanging around over here, but I want to see that it will go through this hourly fair value gap and it will clean this buy side liquidity, and then if it has energy, then it will go to the higher level. Okay, but I don't think that it will go that far, but I would like to see it will clean this buy side liquidity today. No MSS. Okay, no market structure shift. I really would like to see that it will go over there and clean the buy side liquidity. There are no entry setup. Okay, in I mean in S&P also there is no setup. Okay, so you have seen this one. What do you think? This is your market structure shift? I won't go for that. Why? It's because it did, yeah, it has taken this buy side liquidity. If you mark this one as your buy side liquidity, you can do it. You can do it, but this is low probability. It will be your low probability. Why it will be your low probability? It's because it has actually made the relatively equal high. You see this high and this high, they are the relatively equal high. And when that will be relatively equal high and market didn't clean these highs, if you take your entry over there, also there is no fair value gap. So if you mark this one as your market structure shift, that will be low probability because market didn't complete its job over there. Okay, market should clean the buy side liquidity and then it should go lower. First it has to take the buy side liquidity. If you would like to go lower, it has to take some buy side liquidity. It didn't do it. You see here it has also failed to take the buy side liquidity. Here it has also failed to take the buy side liquidity. But what you have here, it has take your sell side liquidity. So you have your sell side liquidity has taken over there. If I get any kind of high market structure shift, I'll go for buy, but I won't go for sell. And if I don't see any kind of setup over there, I just skip this one. You don't need to take every entry. Why you need every entry? You doesn't need it. You don't need it actually. So if you get only one winning trade one day, that will be enough, guys. That will be enough. If you don't trust me, you can just try it by your paper money. I mean, paper money is free in trading view, so you can try it by your paper money, and you will see at the end of the day you have a lot of money. So you just all you need is just one winning trade. Drive lower, brother. I told you whenever the price will be inside the macro, you just need to forget everything, every single thing. I mean, how can I make it more clear? No higher time frame. I mean, higher time frame analysis. Forget about DXY. Forget about your three drive. I mean, everything. Just forget everything. You have to understand two things. First, it will clean some kind of liquidity. Then it will give you the market structure shift with a fair value gap. That's all. You need nothing else. If you see it happens, you have the trade. If you see it didn't happen, just skip that macro. There is another macro at 10:50 to 11:10. You will wait for that macro. Just skip this one. What do you see? Price go anywhere? No, it didn't go anywhere. It was just consolidating over here. It is not like leaving this place. That's why, brother, I'm telling you, just forget everything. You don't need to think about your three drive pattern. You don't need to think about your high time. In high time frame, I know that market will go this low. I mean, it will clean this sell side liquidity, and finally it will clean this sell side liquidity. But if I if I get any kind of market structure shift to the higher portion with a very nice fair value gap, I will take buy. Though I know price will go here, but I will take buy. Why? Because this is inside the macro. So inside the macro, you don't need to think about anything else. What you need to think, how it works over here. Did it clear the liquidity? Did it give you the market structure shift? That's all, nothing else. Okay. Now, if price go lower and you didn't take your entry, don't think that you have missed this entry. You will think, okay, one macro has gone, no problem. I will capture the next second one. Okay, that is the thing. So we are at 10:08. So we have 2 minutes left. If we get any higher market structure shift, I will go for buy. Otherwise, I'll sit. I mean, no trade. Okay, and my voice is clear. I mean, you can understand what I'm talking. Just let me know that because uh, just let me know. Okay, is my voice is understandable or not? I know it's breaking maybe, and I'm really very disappointed with my OBS studio something. Mm, it is disturbing me. My voice is breaking again and again and again. And I tried too much time. I mean, too many way. I don't know. I'm not sure, brother. Thank you, Milad GS. Thank you, brother. I'm not sure. Maybe uh, I need to. I didn't eat yet. Okay. I I didn't. I just take my lunch and Mr. Abdullah Kafi knows. I was with him today, and Kafi, what did I told you? Do you remember? I showed you. I'm talking. I'm just telling you, Kafi, Mr. Kafi, my uncle. Okay. What did I told you? Remember? You remember the white lines I marked on your chart and this fair value gap? If you are listening to me, Kafi, just give me the reply. Okay. So I marked this gap and this gap as I think it was in white color in your chart. So I told you that market was over here and I told you that it will go lower and it will clean the sell side liquidity, then it will go to this gap, then it will clean this buy side liquidity. After that I will expect market will go through this hourly fair value gap and lastly it will clean this buy side liquidity. Okay, if you yeah, Kafi. Yeah, I told you today evening, just before the, I mean, before the session when we met actually. So you see, how did it work? That is how you have to do it. You have to mark everything, everything from the beginning. How I do it, I did it in front of you because you in your chart. I did it when I did it. There was nothing, right? So that is how you have to mark it. Every place you have to mark it. This is the framework. This is the price action. I was expecting this. It happens. So the first rules has met. It was acting like I wanted to act. Now my next expectation is it will go through this hourly fair value gap and that will be my entry. Okay, that will give me the entry setup. So what we can see, we don't have any market structure shift when price was inside the macro. So I will say we don't have any setup for the morning session. I mean the first macro. We don't have any setup. I will sacrifice this one, no problem. I will look for, I mean the next setup. Okay, Kafi. There, no, I'm not. I'm not. Okay, you don't need to say me that I'm right. I'm just telling you that is how. This is how you have. You all of you will mark your chart because it's empty chart. Okay. Now look at this. What do you see over here in this chart? Is there anything very important for you? How do you know where is price right now? What is it doing over here? When it will reverse or where it will go? If you ask yourself this all of this question, no, Beam NG, Mr. Kafi is not doing private class with me. Um, this is not private class. He's like my uncle, and actually he came today. At, we actually met to my home. I'm building my home, so he came over there. So we were spend like near about 1 hour. We actually spent time together. In that time, we were just discussing about the price. That's all. He's not doing some kind of private or something like that. Okay, we know each other from for very long, and after maybe near about 2 to 3 years we met today for 1 hour only. Okay, we are just it was just I mean we didn't actually meet made any kind of appointment or something like that. We were just met it we met just incidentally, okay, nothing else. Don't think like that way. What I was talking about here, right now price is over here and we don't know where price will go because we didn't mark the level. What I did, I marked this fair value gap. Why this fair value gap? Because this happened when news released, so I marked this gap. Then when I have seen this setup has happened, I mean this setup, it has cleared the sell side liquidity, went above. I marked this I mean the lowest fair value gap. Why? Because this will be important. Why important? It didn't act as a support. It didn't act as a resistance. I mean, when price came here, it went above. No, it didn't happen. When it go through that, it retrace again. It went lower. No, it didn't do that. That is why this gap is important for me. This is all for after NFP news. When there will be some kind of big news, you will see this kind of random price action. But if there was no news, then I would take my I mean I would wait for that as I'm expecting lower run. So when I will see that market went below the I mean the this fair value gap, I would take my short. But this is after NFP, so I don't trust any kind of price action over here. So far we have seen that prices actually take the buy side liquidity from this, okay, this buy side liquidity. There is still another buy side liquidity. I want to see that before I mean if it would like to go lower, it will clean this buy side liquidity. If it clean the buy side liquidity and trade the consequent encroachment of this fair value gap, this big fair value gap, that will be very confident for me that market will go lower and I won't have any confusion about taking short, okay. This is not, I'm telling you again and again, this is not a signal to take short. I'm telling you it's because this is the price action, okay. I want to see that it will clean the buy side liquidity, maybe the consequent encroachment. Then it will give me some kind of market structure shift. I will with a fair value gap, I will go for this equal lows, this low and this low. They are relatively equal low, this low, and then this sell side liquidity. Today it should clear this sell side liquidity, okay. Uh, Dada, are you doing the live till 11:10? Brother, I'm not sure. I need to pray actually. I didn't pray, so I have to do it. It's okay, brother. It's the setups easier next week because this a mess, even though it's going to go lower. Yeah, this is not next week. After the AM session, you will see clean price. I mean, in the PM session, this my world. In the PM session, you will see clean price, but I am showing you this, I mean today's morning. It's because you see after the news you had this very beautiful setup. Let me just, you see this setup. Who is not with me, I mean who is not agree that this is the best setup. It has cleared the sell side liquidity. It has given you a very nice market structure shift with a very nice fair value gap. So whenever price will come here, you will take your buy. But you have to remember it's just after the news. And this the what is the news? The news is NFP, one of the most destroyer, okay. Lot of people will blow their account today. I did it. I mean, not the real money. I never trade real money in the news time, never ever. But in the paper money I blow. I like every day I made some money, some money, some money, and at the news day I tried and I blow up my account. So I'm showing you the showing you this because you don't believe the price just after the NFP, because this is highly manipulated by human being, not by algorithm or something else. People are doing this. So you don't believe people. You can believe the robot, I mean the algorithm, the rules, everything you will believe that, but don't believe the people. This is for trading, okay?
Simon, it is the status. I mean, hi bro, I entered now. Do you already talked about the opening range gap settlement? Yeah, brother, I already talked about that opening range. And if you have the time, you please, you can check it later, brother. I talked about that. Which days you should not trade before NFP, CPI, PMI, FOMC. Whenever you will see this four news, you don't take any entry at the PM session just before that news day. Like if Friday is the news, you won't take any entry after the Thursday AM session. From PM session, Thursday PM session, you have no chance to take entry until news release. This is the first rule, okay? When news will released, most of the time you will see this kind of, you know, shitty price action, okay? No direction, just consolidation, something like that. You will look at that. You see this look at this price action, brother. Where price would like to go? Do you have any idea where it will go? It is not going anywhere. It is just consolidating over here. So after the big run, I mean the news released, you will avoid, I mean someone will tell you that you will actually, you can trade after 15 minutes or 30 minutes. Yeah, I also agree with that. You can do that, but for that you need to read the price very carefully. If you are, I mean if you are brand new, you're very new to this price action concept, then you should avoid the entry after the big news. That is another rule, because at the PM session, if the news is released at the AM session, so at the PM session you will get, I mean higher opportunity to take entry, okay? And that is how I think you should think. And I will just, brother, I'm telling you again and again, this is not any kind of, I mean, what can I say, no signal or something. I'm just trying to see it will work or not, okay? So no, this is not signal, okay? Don't think I would like to take this entry or something, nothing. I'm just doing this simply. So what I was talking about, after the big news you will see this type of sloppiness, so you will avoid this until the PM session. If if you have ever seen the night, I mean the midnight run is very bigger, I mean there is a very big run at midnight, you will avoid that session, okay? You won't take any kind of entry in the morning session, I mean before manipulation. Like think this is the run from overnight, from 12 a.m. New York local time to the morning session, I mean 4 to 5, something like that. Then you will avoid the morning session until it will take some kind of liquidity, or some it will build some liquidity, then it will clean that liquidity. Until then you will wait, okay? This is another rules. So whenever you will see big run, you will avoid the very next price action. This is also very important. NFP, CPI, PMI, FOMC, yeah, yeah, all of them, okay. You are welcome, Simon. So what if it doesn't that buy side? How would we enter entry for sell side? Okay. Uh, if you are talking about right now, how do we I know that it will go for the sell side? For going sell side, it has to go below this equal lows with a big run. I would like to see some kind of this run, okay? Not this type of run. I don't want to see it here. This sloppiness I don't want to see here. Now you can tell me, brother, if I wait price need to I mean price reached over there, when I will take entry? You will take entry for this sell side, and you won't hold your price from here to here. You will just take some liquidity, okay? That's all, nothing else. You will take just some liquidity, that's all. I mean liquidity, you understand, right? Because I'm talking about like I'm the market maker. I mean, this is your run. I think this run start from here to here, and your entry will be here, something like that, and you'll close over here. Some, you understand? You will take the meat from the bone. That is all, brother. And again and again, I'm telling you, this is not kind of, I mean, no signal, nothing. I'm just saying it will work or not. Okay. If anybody press your button depending on my marking, and please leave this session. I really don't want to see you over here. I really doesn't want to. I don't want to see you. Okay. Okay. So now let me tell you about this. Now price is over here, the consequent encroachment of the gap, of this big gap. Okay, it has cleared this buy side liquidity. What will you expect now? You will expect some kind of reaction from here. That means now I want to see that market will go lower. It has done its job over there. I would like to see it to go lower. If it started to go higher, I won't do anything. Trust me, I won't do anything, nothing, because it can just go to the new day opening gap. It can go to the higher level of the, I mean the fair value gap, or maybe it will go up and clean this buy side liquidity. I don't know where it will go and it will stop. So far, I have seen that liquidity also traded the consequent encroachment of the 1 minute fair value gap. All of the things has done over there. Okay, Stephen. I'm sorry, guys. Can you hear me right now? Because I think there is some technical issues. Oh man, I'm just struggling with my internet, with my voice, everything. I'm just struggling. I mean, struggling with this. If you can hear me, please let me know. It's because I need to be sure that you can hear me. Just let me know, okay? Uh, so what if it doesn't buy said? How would you interpret it? Okay, I think I gave you the answer. Bimanji Baba, Dada, Brother Bimanji, I just want you to write it down on your notebook. If you don't write it down in your notebook, you will forget everything. Trust me, brother. I want all of you will learn things nobody teach you. I never see. Trust me, I never seen someone will tell you who is fair value gap will work and who is fair value gap won't work. I mean, why this fair value gap is important to me? Why I take my entry over there? Why I did this? I didn't take entry here, here, here. I didn't do anything. But why I took my entry over there? What is the reason? Because this fair value gap is important. I gave you the example. I mean, 2 or 3 days before, I gave you the example. Uh, how I mark some kind of fair value gap, which I used later. This is the thing. You remember the things? Price went higher, trade this fair value gap. Went higher, trade this fair value gap. Went higher, trade this fair value gap. Went higher, then started to consolidate over here. You see, it went higher, consolidate, went lower, then gave you the run. This is the fair value gap which has taken the sell side liquidity. This is the your lower fair value gap which consequent encroachment should be respected, because this will be your breakaway gap. Okay, so when it came here, you are not taking trade because this is just after the 9:30. You are just reading the price. When it came here, it should go higher. If it go higher, then it is all okay. It is not important for me. But if it fails to go higher, instead of that, if it go lower, then it should work as the I fair value gap. When it will act as I fair value gap, I mean, if it failed to work as I fair value gap, then this fair value gap will be important for me later, after all of the macro or price action, whatever you will see, after all of them, this is the fair value gap where you will take your entry. Okay, thank you, an apostolo. So that is the thing, and I think it is enough for today because uh, my expectation is lower, and it is trading higher though. I have nothing to do here because it is already just above the consequent encroachment. I wanted to see that market will trade the consequent encroachment and then it will go lower. If you go to the 5 minute chart, I will look at the 5 minute chart as well. So it closed above the consequent encroachment. So my next expectation is it will go to the, I mean, this day, new day opening gap, it will go over there. This is my expectation. Nothing is, I mean, the indication, okay? My expectation is it will go to this new day opening gap, and if it is very jealous, then it will actually close all the, I mean, all of this fair value gap. It will close all of the fair value gap. Right now, I am expecting it will go to this new day opening gap. That is all. And yeah, still now I'm thinking that it will go lower, and all of this actually the effect after the news. Let me go over there. So it actually it has broken over there. I'll just mark some level. I want now, guys. This one is you have to understand. I marked the consequent encroachment of this week, but it failed. I mean, it didn't hold the price. Instead, price went lower. Where will it go? You see this candle. This, I mean, the candle high. I mean, low, high, lower, low. So just mark this one. What happened? Oh, sorry. Mark this one as your breaker. Now this is your breaker, okay? If price would like to go higher, it should stop by this breaker. It will stop by this breaker, then it will start to go higher. If it fails, how when I will think that market won't go higher, instead of that it will go lower. When this low will be broken, this is the lowest low. I mean this fair value gap, okay? When this low will be broken, then I will think okay market will go lower. Maybe it will clean this sell side liquidity, or maybe it will go more lower, whatever I will think that. But until it's above the, I mean this water block, let me mark this. Until it is above this water block and also the consequent encroachment of this water block, I mean the middle of this water block, I will, I'm still thinking that market will go higher. I don't want to take any kind of sell in dollar index, okay? I don't want to see that. If you go to the 15-minute chart, it is still actually trading this gap. I mean buy side imbalance, sell side inefficiency. And if it really would like to go higher, it will go high before, I mean from the water block level or the consequent encroachment of the, I mean the mean threshold of the water block. From there it will go higher. Or if it fails and it takes the sell side liquidity, then I will start to think okay maybe market will go lower, and it will go some random places or something, okay? But I want to see dollar will go higher. Here is the same thing. It has already broken the new day opening gap. Right now it is going over there, but I really don't want to see that market will go above this high. If it is able to go above this high, I'll think in different way. But until now I am thinking that it is actually trading this whole inefficiency, sell side imbalance, buy side inefficiency. So it is actually providing all the inefficiency over there. So what will you do when you will take your entry? You won't do anything. I am repeating this again and again. You are doing nothing. Why? This is all manipulation by human being after the news, using the news. That means people can't do this in the normal time. when there is a normal time, I mean the normal trading time, nobody can actually has the right to do this, to do this kind of manipulation. They can't do it. They have some kind of obligation or something like that. But when there is a news, then they can interfere over here. And when human are here, they do this type of, you know, shitty price action. Okay, I think this would be the perfect word over here. They actually make so many manipulation. That's why you will avoid this one. What is, why you will go into this? If you go to the last day, I mean last day price action, I tweeted it this. uh where is the thing? Just let me go. Okay, I'll show you something. So here in my Twitter, I asked you guys, is there anyone who can actually mark the, I mean, who can mark the I mean PM session, the right last session, macro session, mark and screenshot that. I think nobody actually gave me the screenshot. So far I remember nobody gave me the screenshot. But I really wanted some kind of screenshot so that I would be happy to see that I actually can give you something that is useful. But nobody actually, maybe nobody didn't give me any kind of um, reply, message reply. So I'm really I get hurt. You can say that I get hurt, really hurt. So this is the yesterday PM session. I told you don't take any kind of trade. Why I told you? You see, this is the macro 150 to 210 macro. When price go into the market, I mean, I don't go to the deep. I will just show you the fact. It has taken the sell side liquidity, then gave you the very nice market structure shift. This is your market structure shift. What is the rules? You will take your entry to the upper fair value gap, I mean to this fair value gap, and you will keep your, I mean stop loss just below the consequent encroachment to the lower fair value gap. Okay, I was talking about this lower fair value gap. This is the lower fair value gap. So you will keep your action by the human beings. If market was doing that, you would see market actually traded to the upper level of this fair value gap or maximum the consequent encroachment of the fair value gap, not below the consequent encroachment. Okay, but what price did? It went lower, 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 stopped there. It went higher, come back again to this fair value gap, then it went higher. Now let's talk about the PM session. I mean the last macro. Okay, I mean 250 to 310 macro. This is the 250 macro, and this is the 310. I'm sorry, I need to take a call again. I'm extremely sorry. I have to take this call. I'm really sorry, brother. I'm sorry, guys. I just need to take that. I'm right now. I'm really too busy. I would like to. End this end my session right within so fast. Okay, I'll just talk about the last macro, and I will just complete my session today. So that was the macro, and if you see when it came into the macro, it has taken the buy side liquidity and then gave you the market structure shift. There was your fair value gap. That was your fair value gap, and it went there, then break lower. But trust me, guys, you see this whole price action. This is the manipulation. I am just showing you the macro for near about 9 to 10 days, and uh, all you know that how clean the macro run. Okay, when you will get a chance to take entry, you will get some kind of very clean price action. But you see this price action, this is shitty price action. I mean, it didn't follow any rules. What was there? There was nothing. I mean, though there was a chance both of them worked well, but this is the thing, it happens just before the NFP news or this kind of big newses. And if you see here, I mean the today's macro session, here macro session, this type of things it happens. See, it actually take your sell side liquidity, gave you the market structure shift, but when after the macro session, and also it actually traded this fair value gap instead of this fair value gap. This is all happens after the new, I mean the big news. That's why you have to avoid the previous session and the session when the news released. Okay, and so far we can see market went above. I mean, it has closed the fair value gap, I mean the 1 minute fair value gap. Now I am expecting that it will go lower, but if it failed to go lower, it should go lower. But let me just mark some place from. Oh man, I need to go outside, brother. Extremely sorry. So far we can see it has actually traded the water block. There is a water block, and it has also closed all the sell side imbalance, buy side inefficiency. And if it would like to go lower, it will go from here. But if this high is taken, then I will wait for more information. I mean, what do I mean? I mean, if it go above and go above this highs, then this consequent encroachment I will look for that, because I would like to say it will go through this, then this consequent encroachment will act as a support. Okay, though I don't want to see that. I don't want even see that it will go above this opening gap low, because it has already done its job over there. This opening gap already balanced in my opinion, so it shouldn't go there again. I would like to see the lower price, but this is what it is. I don't know. I mean, I'm not sure where it will go right now. In the morning session you have to skip, in the PM session you will wait for the trade entry. Okay, I hope you will get some clean price action, and maybe after 8 minutes your next macro will start. And I'm very sorry I can't be here. I need to go outside. I need to fix some problem first. So I think that is all for today. And the micro sound, please একটু increase করার চেষ্টা করবা. Brother, I'm just struggling with with this audio problem. I don't know how to fix it. I tried it so many times, but I don't know what how it works. Okay, the obvious how it works, I really don't know. I think I need more time. And I'm really sorry, guys. I have to go. And if you think it's little bit helpful to understand the price action, how to read the price, then please give me a thumbs up and some kind of share or whatever you think it is helpful for me. If you want, then you can do it for me. Okay, so see you guys, take care and be safe. Bye bye.